You're welcome back. In this video, we will look at the second item in the partnership agreement, which is the profit or loss sharing ratio. The profit or losses of a partnership are shared among the partners in the ratio agreed by the partners, which will be stated in the partnership agreement. The profit or loss sharing ratio does not necessarily have to be on the basis of capital contributed by the partners. Let's look at this example. If A and B are in partnership and they made a net profit of 200,000 naira in year 1, they agreed to share profit or losses in the ratio of 2:1. That is, A has 2, B has 1. Determine the share of profit. The share of profit of each partners will look like this. Okay. The net profit made was 200,000. That was clearly stated in the question. So this 200,000, we're told that the sharing ratio is 2:1. So the share of profit will be A will get 2/3. That 3 is 2 plus 1. Okay. 2/3 of 200,000, and that gives 133,333. B will get 1/3 of 200,000, and that is 66,667. The double entry for this share of profit is we will debit a profit or loss appropriation account. You will learn what that is very soon. And we will credit the current account. And that is the double entry for the share of profit to each partner. In the next video, we will look at the next item in the partnership agreement. Thank you very much. See you in the next video.